Hi, this is Simon with Trade and Perform Coaching. Today's August 13th, 2013, and I'm doing a trade review for both NQ and ES. Today was quite exciting. Let's get the legal stuff out of the way. Nothing in this video should be considered a trading recommendation. This is for educational purposes only. Trading futures is very aggressive, and you can lose your entire investment and then some. So please consult a trading professional prior to deciding to trade futures. So let's jump into the fun stuff. I actually would like to start with ES. So has been the problem, everyone's problem, over the last couple of days? Well, normally, if you'll look through the blog, you'll see that at each level, I would normally expect rotations at each level from anywhere from 1 to 4 points. We're not getting those at the levels. What we're getting is this. So this morning we did get a rotation up for 2 points, but then we're just getting this crap right here when just it's not coming up, it's not coming out, it sits and then it flushes. Okay, or then it sits here, it doesn't rotate up, it doesn't break through, and then we kind of get a reversal of the trend and goes back up. So when you're in that situation, my bread and butter are those 2-point rotations. I've been struggling. I've been profitable, but I've been struggling, and I'm not as profitable as I normally am. And it's only a matter of me making a mental error to go from profitable to unprofitable. I think I lost money on Thursday. I did okay on Friday. I did okay on Monday. Certainly did okay today, but there were some struggles in between there. I did have one scratch trade, and I had one loser as well. So the first thing I looked at is like, okay, so this isn't working. I can't demand from the market to give me what I want. So my next best trade that I have is a swing trade. And let's kind of go through how a swing trade is set up and how it's a different mentality. And instead of looking to come in and out quickly, I'm looking for the market to set up for me. I like tick divergence. And I like a good extension, anywhere from 6 to 10 points minimum, if not more. I like the action, meaning the divergence, to occur in the zone, not out of the zone. I position the trade with fewer contracts because I plan to be in it longer, and it's just more mentally strenuous for me to have a very concentrated position when I'm going to have to sit there for an hour, maybe 2 hours or 3 hours, versus I'm in and out. I can often catch my scalps near the lows, and I take very little heat, and that's just an easy exercise for me mentally. So it's a little bit of a different game, and I have to adjust my expectations a bit. At the same time, I'm also having to adjust what I expect to happen on a swing trade. Instead of taking a 2-point trade and exiting everything, I'm looking at scalps. And if I'm at initial support, I'm looking at a scalp that might be, instead of 2 points, 3 to 4 points away. And I'm looking for a potential of a 5 to 10 point move in total. I like to scale along the way. Maybe at 3 points, I'll take out a quarter of the trade. At 5 points, I'll take out another quarter of the trade. At 7 or 8, I'll take out another quarter, and then I'll leave the last as a trailer. Okay, so this way it's much easier to manage, and I'm not making as many decisions. As a matter of fact, I handled it poorly today. I took the entire trade out by the time I had 5 points. And I took a short, and that short turned into a loser. New York time. New York is very hard. Lunchtime is hard to place a swing trade and get any kind of movements going out of it, as well as scalps. I hate it. It's where I lost money today. It was a poor mental decision. And that's the other part, is adjusting. When things are slow, you're going to make fewer decisions, and you're killing time. And you have to find a way to occupy your mind so that you're not doing something just out of a boredom. And I really think I took that trade in the middle of the day out of boredom. So let's take a look. We opened up here near 1691. So the first thing I'm thinking in my mind outside of that scalp is I want to put on a position about 10 points away. So I come down and look, what's 10 points away? Initial support, it's already there. Okay, all I have to do is put a limit order in on the trade. I have to put a reasonable stop behind. Like I said, usually 2 to 3 points. Okay, reasonable stop behind the trade. And that's it. My first part of that obligation is over. Okay, because I cannot tell the future where the market's going. It doesn't work every single time. And by the way, this was, if you look at the trade review from last night, This was part of my trade plan. I listed 10 items under item number 3. I put traded support levels after good rotations, read, more than 6 to 8 points, have provided good trade opportunities, and tick divergence has been very effective at signaling when those opportunities are being presented. Okay, so we're looking here, we're at 1691. So what happens 10 points up? That would put us up at 1691, excuse me, from 1681 to 1691. Well, there's no zone here at 1691. There's nothing to do. So I'm going to look at the zone above, and I'm going to look to see if I can get tick divergence. And while it was ever so small, the middle to back of this zone provided great trade location, and you did get your 2 points. We never got the rollover to the downside, and I certainly wouldn't have wanted to have stayed short in this last hour, although the last hour has been Chop City. I would not have wanted to stay short this position going into the last hour. However, everyone, no matter where you shorted it, should have been able to make 2 points off of this trade. Let's talk about the last hour of the day. The last hours have been hard. So if you're going to trade it, you need to know that you need at least a 3 or 4 point rotation down, and then you're going to get a 3 or 4 point rotation up and a 3 or 4 point rotation down. It doesn't take much more than that. Where traders get into trouble with sideways trade is anticipating a break lower or a break higher. They're shorting near the lows and they're going long near the highs, and they're just getting crunched going both ways. And it doesn't have to be that way. So when you're sitting down, again, I want to keep the focus on this towards the mental side, because if we look at NQ wasn't a whole lot different from VS today. We can take a quick look. Here's NQ. NQ, the only advantage we had was the white zone was above instead of below. I guess it had the net same effect, except that the short set you up for a beautiful trade to the downside. Short right here in the zone yielded you from basically 31.30 down to 31.10, 20 points. That's $200 a contract plus. I was a bit off on my initial support level here. However, there were some things supporting you at this level. If you look at it, when we came down to this level, again, okay, so there's no direct correlation between the NYSE tick and the NASDAQ. I want to make that clear. This is purely my own invention. I'm not a CTA. This is just something that has worked for me when the NASDAQ and the S&P 500 are trading in unison, as they appear to me to be doing so right now. I can use NYSE ticks to set up swing trades in the NASDAQ. It does fail. They do come apart sometimes. Be very aware of that. Caveat emptor, I believe they call that. And you can lose a ton of money taking S&P 500 tick divergences and applying them to the NASDAQ. So make sure that they are trading together very closely if you're going to do this. So that being said, the same tick divergence that's set up along in the S&P 500 set up the long in the NASDAQ, and almost right into the lows. Look, new lows, tick divergence. This is on a 5-minute chart, but it was even more clear on a 1-minute chart. And that was it. That was the low. I mean, you had a humongo trade set up here. I don't have a better word for that. This is humongous. This is like 40 points. This is $400 a contract from the low to the high, and it was a gift. This Globex high here, this resistance point here, probably would have held the market the rest of the day if it wasn't for the Apple News. Shorts got roiled here, chasers got roiled here, and understandably so. Don't chase NASDAQ. Damn, it's hard. And one of the things I use when I'm scalping NASDAQ and it's in an uptrend is I wait for a negative tick. Wait for a negative tick, a good one, 400, 500, 600, to position yourself. Look, right here. You took relatively little heat and a nice pop up. You position right here or right here. Okay, you still got to pop up. It's so much better than chasing it near the highs. It can still backfire on you. This is just my God, Simon, I can't control myself. I've got to trade every little tick. How do I know where to get in? Well, look over at the NASDAQ, look over at the S&P 500. If you get a negative 600 tick, that's probably a decent area to scalp in. I have no science and no numbers behind it. I just simply received multiple emails from people exasperated because they're getting smoked trying to scalp the NASDAQ. And NASDAQ is a jittery little trader. And next thing you know, you've taken several $40, $50, $60 stops, and you've lost some real money. So the best way to do it is, just like in the NASDAQ, let it get a good extension down, buy into support, look for tick divergence, and ride it up. The rotations at the zones are still not working in NASDAQ any more than they're working in the S&P. So again, I've had to shift my mentality, okay? Tight stops are getting killed. Half point, 1 point stops are getting murdered in this thing, and you have to make a decision when you're using a stop. You have to figure out both if the trade you're trading and the stop you must use match. If you have a trade that requires a 3-point stop and you're using a 1-point stop, bad things are going to happen, meaning you're going to get consistently stopped, you're going to get frustrated, and you're going to do damage to yourself both mentally and financially, and you're going to make it really hard to either become a successful trader, maintain being a successful trader, or turn around your losing trading, one of the three. The other key to this is when you're trading and becoming a successful trader, have a trade plan written down in the morning. Do a trade review. Were the objectives you wrote down in the morning the same as what you actually did during the day? If they're not, stop trading and find out why you cannot follow your own trade plan. And it happens to a lot of people. First of all, most traders don't have a trade plan. Secondly, they've never bothered to see if the edge they have is actually valid. They're out there just kind of chasing every indicator, tick reading, stochastic, MACD out there. And it doesn't help you at the end of the day. The biggest problem most traders have is that they'll go through a period of time where they're making a buttload of money. Me, for example, I've made so much money in the last 6, 7, 8, 9, 10 months with the 2-point scalps, really since last September. Okay? All of a sudden, they're not working. If you continue to try to bang your head against the wall, forcing that trade to work, you will give back all the money you made and then some in very quick order. It happens to traders all the time, but it doesn't happen to you. If you don't have a second trade, if you can't mentally prepare yourself to swing trade, just stop, wait. When everyone comes back from vacation from Europe, here in the United States, and September gets going again, those rotations will come back. They haven't disappeared forever. They've disappeared before. They shall return. People have problems with swing trading sometimes. Swing trades stop working. You just have to have more in your arsenal than one trade. And I work with traders to help them develop that skill, both from a mental standpoint and from an actual technical standpoint. Writing the trade plan and keeping very careful statistics on what's working and what's not working. Specifically, not only on the trades you took, but on the trades you didn't take, but were in your trade plan. Because you have to be able to see, I'm still keeping stats at each one of these levels to see if the trades would work. And as long as I'm getting red there, I will not start trading. But if I get through 1 or 2 days where all of a sudden those rotation trades start turning green for me, that's when I'll know to turn back on the trade, and I will go right back to making money. So I'm hoping this helps some people out. Again, one thing to notice, NASDAQ closed just under all-time highs. I would be cautious shorting if we gap above those all-time highs tomorrow morning, or we open right at them and we have an open drive higher into new all-time highs, and that will inevitably drag the ES higher with it. Also, one of the things I wanted to point out, just so you can notice, people have been pointing out lower lows, lower highs. Well, that got blown out today. We're no longer making lower lows, lower highs. As a matter of fact, we have a higher low and a higher high today. Any one piece of data in and of itself isolated means nothing. And if you're trying to base your trading on technical trading on what's going on fundamentally in the market, you're going to have big issues with your trade results. So don't worry about analyzing the fundamentals unless you have some kind of edge that Goldman Sachs doesn't have. Develop an edge from a technical standpoint and beat the crap out of it so you can make a ton of money trading. That's what I would suggest. My name is Simon. I'm with Trade and Perform Coaching. I certainly hope this helps some people. Feel free to contact me on Twitter, StockTwits, or at tradeandperform@gmail.com. I look forward to doing this all over again tomorrow. Have a great night, folks.